Hi, welcome to my Money Masterclass, an initiative to increase the FIntelligence, the financial intelligence of people, in the most unbiased way. I will not solve your financial problems or give you the solution. No, I'm not going to do that. I will give you the necessary knowledge and information so that you are capable enough to take your own financial decisions and much better decisions. I'm going to keep it slow paced, short duration, one topic at a time, not try to complicate by fitting in multiple topics into one. So hopefully this will help you absorb the information easily, gradually, and over a period. Hope you will like it. Do leave your feedback and suggestions on the comment section. And yes, do not forget to subscribe my channel and share with others too. As this is our first episode, today we will stick to the fundamentals. Understand why we all need to have financial intelligence, why have I initiated this money masterclass, what is personal finance, and most importantly, some of the most common mistakes people do. As we move forward in the next episodes, I plan to talk about income, expenditure, tools to manage IND, uh, assets, liabilities, savings, investments, and it will go on in a structured way. Just a standard disclaimer before I start, mainly that this video presentation is for education purpose only and should not be treated as a substitute of any professional personal financial advice which differs from person to person. We study hard to find a job or run a business, right? We work hard in our job or business to earn money. But then, unfortunately, most of us do not know how to manage this hard-earned money and use it as a resource or capital to build wealth or multiply it. Not just because we never had personal finance as a subject in our academic curriculum, but because we never bothered to learn it. Even several finance graduates and professionals do not have personal money management skills, as this is not about just the academic qualification. It is a skill which is personal, it is an attitude which is personal, it is a mindset which is personal. Just look at the financial literacy level across India. Chhattisgarh has lowest literacy at 4%. 4%, almost nil. And Gujarat is highest at 83%. And if you just take a glance, most states have literacy rate less than 25%. This financial illiteracy has created a huge market for those in the business of financial services to sell you any product they want by disguising it as one of the most beneficial products for you. Sellers, agents, brokers talk about pros about the product in a silo, but do they talk about the cons? Do they compare various options and say why something else doesn't suit you? Do they know you, your family situation, your financial situation, your future plans or goals to say which product is best suitable for you? No, they don't. I know tons and tons of people who were sold and now stuck with investments which doesn't suit them and doesn't meet their financial goals. Neither are they able to get out of it, nor it makes sense to continue further, like some insurance policies or some mutual fund or some deposits, etc. Financial illiteracy leads to many wrong financial decisions, causing regrets in your later part of life and at a time when you cannot change the impact of your past decisions. The bigger challenge with financial intelligence is that people do not know that they do not know. They assume their half knowledge as the complete knowledge. They know the benefits of an asset class as the benefits are well highlighted by selling agents, but do they know their drawbacks? Do they know how to manage that asset? Do they know what other options they have? Do they know if that investment will meet their future goals? No. Take an example of PPF. Everyone knows about tax saving on deposits and the tax-free returns it gives. But do you know that you will get maximum return only by depositing entire 1.5 lakhs by 5th of April every year? The later you deposit or the lower you deposit, the returns will reduce. Have you read about it somewhere? I'm pretty sure no. Take another example of pension schemes like EPS, NPS. All agents, media, government talks about tax saving on deposits and regular periodic pension you will receive after the retirement. But do you know exactly how much percentage of money you will receive? Do you know the inflation adjusted future value of that amount you will receive? Do you know if that money will really be enough to meet your needs at that time? If it's not enough right now, it won't be enough in future, surely. Let's look at some of the other financial mistakes people commonly do. Sorry. Investing in assets recommended by a banker, a relationship manager, distributor, agent of mutual fund or insurance company. Having herd mentality, investing in assets in which a trustworthy, a close friend or relative has invested in. Investing without a financial plan in place, without assessing your risk appetite, without chalking out your future financial goals and needs. Investing without calculating the future value of the money you need today. Investing without calculating the real returns, which is post-tax, post-inflation. Investing without weighing all the options and understanding the pros and cons of each, and without knowing how to best manage it. Not focusing on asset allocation and diversification. Investing too much in illiquid assets which doesn't help you when you need it. Example, I know a person had three houses worth 10 crores in total. He got diagnosed with cancer. Unfortunately, it was a very expensive treatment, needed 45 to 50 lakh immediately, and he didn't have enough money or medical insurance to fund that treatment. He had to go for loans from friends. He had to take a personal loan from the bank at very expensive interest cost. Imagine what's the point of having three houses of 10 crores if you can't fund a treatment of 50 lakh rupees? First spending and then investing the residual is another big mistake rather than the other way around. Picking an investment option just looking at the tax saving potential and not the real return of that investment instrument. Making tax saving investment too late in the year leading to higher TDS or lesser returns. Usually we think about tax saving investments in Q4 between January to March, which is too late. If you do it at the beginning of the year, you probably might increase your returns from those investments. Then not caring about the TDS from various sources, bank interest, dividends, professional fee, etc. Many people don't even know there are TDS or there's tax being deducted from their returns. They don't even file the return. They don't even claim those tax deductions. Buying insurance policies for returns. Never ever mix insurance and investment. Those two are two different products with different purposes. Not having adequate insurance or right kind of insurance is another big mistake people do. This is my favorite. Not able to manage the debt or loans efficiently to minimize the interest costs. So many people are trapped in debt. They don't know how to get out of it. The screenshot looks familiar to you. We see it regularly in all the newspapers. Buying consumable items on loans or EMI, car, phone, TV, washing machine, fridge, AC, etc. Falling for buy now pay later (BNPL) schemes like in hotel, flight, travel packages. Not paying your credit card bills in full and just paying the minimum or partial amount or rotating it from one card to another. Not checking and controlling large spends like huge credit card bills, huge electricity bills due to AC. Buying online every now and then could lead to huge outflow. Not being concerned about the personal credit score and how to keep it healthy. Not monitoring the bank statement on regular basis. Being very casual about sharing your personal information. So many people are very casual, they keep floating their name, mobile number, date of birth, email ID, address, PAN, Aadhaar, etc. all over the place, especially for getting some free services, like a free credit scores on a financial website. You don't know how these personal informations are used for certain frauds and scams, because each of these personal data has a lot of financial information attached to it. not discussing about finances with their spouse who are left ignorant on sudden demise or separation from the spouse. Most Indian women still do not get involved in understanding their personal and family financials and leave it entirely to their husbands. And most husbands do not share anything with their wife. After his death, they struggle. Several lakhs crores of money are lying unclaimed with banks, EPFO, and other financial institutions. No one is coming forward to claim it because either they don't know that those money belong to them or they don't know how to go about it, how to claim. Making decisions based on the influencers' suggestions or falling for their stock tips. This is hot these days across all age groups, across all states, regions, everywhere. I'm yet to come across one influencer who knows personal finance management actually. Most are copying each other, repackaging same stuff which others said or wrote somewhere. I have not found any one person who has done it all, made it, and then sharing his or her knowledge. Money management is one skill which can't be mastered in theory alone. Else all the chartered accountants would have been in the list of wealthiest people, isn't it? But do you see even one finance profession in that list? No. It's a skill which can be learned only by experience. And those who learn it or know it usually do not share it openly. No, now don't judge me, I'm just crazy. And the biggest mistake, not spending time, effort, and money to educate yourself on personal finance money management skills. This is this is exactly where I come in to educate people on managing their own money better. Let's start from the start by understanding what is personal finance. Personal finance simply means planning your financials today for a better tomorrow. It is about meeting financial goals, both short term and long term. It depends to a great extent on your income, expense, living requirements, individual goals, and desire. And coming up with a plan, a solid plan to fulfill those needs with your financial constraint. But to make the most of your income and saving, it's important to become fintelligent, financially intelligent, to identify good investment options and make savvy decisions in financial life. Some people do this themselves, irrespective of their ability or knowledge to do it. But some people consult a financial advisor to plan this for them. My personal view is that this is too personal and you should learn it properly and do this yourself. Consult an expert to learn it, but decide for yourself. And consult only those experts who is not a distributor or agent of any financial product like mutual fund, insurance, corporate deposit, commodities, gold, silver, real estate, etc. He or she should be completely independent, focused only on educating. Even if you have to pay some fees for it, make sure the person is charging fees only for the course and person is not selling you any commission based product. Consider it like the school or college fees you have paid to get the certificate which no one cares about anymore. After all, you know your life, your family the best. You know what is best for them. You work hard for your family today and you dream of a secure future for them, isn't it? And with all due respect, I believe that most advisors are selling the products on which they earn a good commission. They will sell the same product to all their clients, whether it is suitable or not. Amongst those who manage their money by themselves, most of them just follow the herd mentality. They invest where their siblings or friends are investing, or they invest what the bankers are selling them. That is the bigger problem. Just like every medical patient needs to be examined of his or her problems diagnosed well before prescribing medicines and a line of treatment, similarly, to prepare a proper financial plan for us as an individual, we need to carefully chalk out the financial goals, understand the needs, financial situations, capability, risk appetite, expected returns, emotional mindset, and various other things. Let me give you some examples. Family situation. One person needs to support the dependent parent, dependent sibling, besides spouse and children, whereas another person needs to support only his spouse and children. Clearly, the second one has different future fund requirement, isn't it? Because he has no medical expense of aging parents, no life expense of the siblings. Financial goals can be different. The financial needs of one person having no child or one child or two child will be different, clearly. Financial capabilities are different. One person earns 20 lakh per annum and another earns 50 lakh per annum. With other factor constant, clearly their saving capacity will be different. So you can't sell the same product to both of them. Risk appetite. One person may have few dependents like dependent parents, whereas another person may have a financially very sound parents who are not dependent on you. Clearly, the risk appetite of both these people are different. Managing emotion is the biggest differentiator for the returns people earn out of their investments. Like stock market may not suit someone with lesser patience or a pessimistic view or someone who panics quickly. So remember, this is called personal finance for a reason. It's best kept personal and dealt with care and diligence. Thus, the financial products or investment options available in the market are not one size fits all. The financial plan must be tailor made to suit you. This is not a rocket science, it's a skill. It can be taught, it can be learnt. If you have the common sense and attitude to learn, you can learn it. You just need these two things, common sense and attitude. It's your brain, your game. And this is exactly the objective of these masterclass. I want to empower the viewer, reader with the necessary financial knowledge and awareness so that at the end of all the modules, you should be able to minimize your financial mistakes. You should have developed a deeper understanding of various financial products, their pros and cons, and how to manage it, and choose the one which best suits you. You should be able to assess your own risk appetite. You should be able to identify your own financial goals. You should be able to develop your own financial plan to suit your own requirement. You should be able to track, monitor your finances, identify the financial setbacks if any, and do the course correction as appropriate. You should be able to evaluate the advice of any financial advisor or selling agent and not get fooled by them. I hope you are as excited as I am about this masterclass. I hope I am able to educate on things which really matter and make it meaningful and useful. So, guys, do watch all the videos of this Money Masterclass by Harsh Agarwal. Join the WhatsApp group of our community by sending a text message to this particular number and follow me on Twitter at Harsh Agarwal HM. In the next video, I will talk about income and expenditure and various tools to manage those expenses. Thank you very much for your time to listen to me. Have a great financial journey ahead. Take care.